Hello, chart enthusiasts, and welcome back to Explain the Charts. Today, September 10th, 2025, we're diving into an in-depth analysis of BTCUSD, looking at both recent market news and the underlying chart data. Let's start by understanding the current landscape shaping Bitcoin's price action. On the news front, a significant driver for Bitcoin's recent upward momentum stems from growing expectations of imminent U.S. interest rate cuts by the Federal Reserve. CME Fed Watch indicates a 90.1% chance of a 25 basis point cut and a 9.9% chance of a 50 basis point cut during the September 16th, 17 meeting, fueled by signs of a slowing U.S. labor market. This macroeconomic backdrop is often compared to the 1990s, where rate cuts spurred a substantial stock market rebound, and analysts like Fundstrat Global Advisors Tom Lee are even suggesting Bitcoin could easily reach $200,000 before year-end. Corporate adoption continues to be a strong theme, with Japan's Metaplanet announcing plans to raise a staggering $1.44 billion to expand its Bitcoin holdings, building on its impressive 487% YTD yield. Similarly, Mara Holdings, a Bitcoin miner, posted strong gains on a revenue milestone, highlighting the profitability in a favorable Bitcoin environment, though caution is advised due to crypto's inherent volatility. However, there's also a mixed bag of news that warrants attention. Kindly MD, another crypto treasury company, saw its shares fall after announcing a $30 million investment in Metaplanet, raising questions about the sustainability and dilution risks of such strategies, especially after Bitcoin's August tumble from record highs. Furthermore, Bitcoin derivatives markets show persistent caution, partly due to outflows from BTC spot ETFs and MicroStrategy's non-inclusion in the S&P 500 index. On the broader crypto ecosystem, spot Ether ETFs experienced over $1 billion in outflows, reflecting wider macroeconomic concerns and a dip in rate cut optimism, which could subtly impact Bitcoin sentiment as well. Despite these cautious signals, the expanding partnership of Ripple providing crypto custody services to Spain's BBVA Bank and Gemini preparing for an IPO with Nasdaq's backing underscore increasing institutional adoption. The potential mandate for the U.S. Treasury Department to outline protocols for a strategic Bitcoin reserve also points towards growing recognition at the governmental level. Now, let's turn our attention to the daily chart to see how these news developments translate into price action over the past year. From April 2024, BTCUSD embarked on a significant uptrend, moving from the mid-$60,000s towards the $100,000 mark by December 2024. We can observe consistent higher lows and higher highs, indicating a sustained bullish long-term trend despite intermittent pullbacks. Notice the sharp V-shaped recovery in early August 2024, where price plunged to nearly $49,000 before swiftly rebounding to above $61,000 within days. This move, accompanied by massive volume, suggests strong buying interest at capitulation levels, forming a robust support zone. More recently, in February and March 2025, Bitcoin experienced a notable correction, dropping from highs around $98,000 down to critical support near $78,000. This $78,000 level held firm, initiating another strong reversal that propelled Bitcoin past $100,000 once again and eventually to an all-time high of $123,380 in mid-August 2025. This peak was followed by a substantial correction, bringing prices down to the $109,000 region by early September, reflecting the broader macro concerns and fading rate cut optimism we just discussed in the news. Currently, as of September 10th, 2025, Bitcoin is recovering from this dip, trading around $111,500, aligning with the news reports of a cooling phase under $113,000, which is seen as groundwork for a breakout. Let's zoom into the 15-minute chart to analyze the very short-term price action around this consolidation phase on September 9th. We can see Bitcoin opening around $111,064 and gradually grinding higher throughout the day, closing near $111,507. The price is largely contained within a tight range between $111,000 and $111,500 for much of the day. Volume on this shorter time frame appears moderate, indicating a lack of aggressive buying or selling pressure, which is typical of a consolidation pattern. This hourly activity clearly reflects the market consolidation, and range narrows as $111,000 holds strong headlines we encountered earlier. Looking at the bullish case, the strong likelihood of Fed rate cuts in the coming weeks provides a significant tailwind for risk assets like Bitcoin, potentially mirroring the bullish trends of the 1990s. The aggressive corporate treasury strategies, exemplified by Metaplanet's massive fundraise and previous acquisitions, demonstrate a strong belief in Bitcoin as a long-term store of value. Continued institutional adoption, from Ripple's banking partnerships to Gemini's IPO plans, further legitimizes crypto and broadens its investor base. However, reasons for caution and a bearish outlook should not be ignored. The vulnerability of crypto treasury companies to price swings, as seen with Kindly MD's stock fluctuations, highlights inherent market risks. Persistent caution in Bitcoin derivatives, coupled with outflows from spot Ether ETFs due to macroeconomic concerns, suggest underlying investor apprehension that could spill over to BTC. Historically, Bitcoin has also shown a tendency for sharp reversals after significant gains, so traders should remain vigilant. To recap, important price levels for BTCUSD in the short and medium term are crucial to watch. Immediate support can be found at the $109,000 level, which acted as a bounce point after the mid-August correction. Should this level fail, the stronger psychological and historical support zone sits firmly around $78,000 to $80,000, as demonstrated by the strong reversal in March 2025. On the upside, the immediate resistance is at the $113,000 to $113,500 range, a level frequently mentioned in current news as a barrier to overcome. A sustained break above $113,500 would likely signal a push towards the next significant resistance at $120,000, a key psychological and technical target. Beyond that, the all-time high around $123,380 from August 2025 presents the ultimate challenge for bulls. An unbiased prediction suggests a 70% likelihood of a breakout towards $120,000 in the short to medium term, provided the anticipated Fed rate cuts are confirmed and inflation data is favorable. This bullish scenario would be reinforced by continued corporate Bitcoin acquisition announcements and a resurgence in spot market demand. Conversely, there's a 50% likelihood of a retest of the $109,000 support, or even deeper if macro sentiment shifts negatively due to unexpected inflation figures or a delay in rate cuts. If $109,000 breaks, a move towards $100,000 or even the $95,000 to $97,000 range could occur. Key things to look for in the coming days and weeks include the Federal Reserve's September 16th to 17th meeting outcomes, the release of U.S. inflation data, and any further updates from Metaplanet regarding their substantial Bitcoin investment plans. Pay close attention to daily close prices relative to the $113,000 and $109,000 levels for early indications of bullish or bearish continuation. Volume on significant moves will also confirm the conviction behind price action, especially if we see a breakout or breakdown. Thank you for joining us on Explain the Charts, and may your trades be ever in your favor.